Wait a second, don't scroll past this. Have you ever wondered if investing just $20,000 in a single ETF could surpass your full-time job? What if I told you there's an ETF that's been quietly outperforming some of the biggest names in the dividend world? Seriously, it makes SCHD look like a basic savings account and leaves JEPQ in the dust. I'm talking about MSTY, the YieldMax MSTR Option Income Strategy ETF. And if you're not paying attention to what this ETF is doing, you could be missing out on one of the most explosive income opportunities in investing. But before we dive in, subscribe and never skip any part of this video if you're actually serious about building long-term wealth. Now let's start with the numbers that'll make your jaw drop. While SCHD is sitting pretty with its respectable 3.5% dividend yield, MSTY is giving a yield that's crushing industry averages and setting a new standard for monthly dividends. This ETF would make every dollar you've put in other funds jealous. Imagine investing $10,000 into MSTY. Just 1 month later, boom, you could be staring at returns you never thought possible. MSTY has the potential to drop up to $4,000 in dividends into your account every single month. Personally, I hold 900 shares of this MSTY. But before you start thinking this is some kind of magic money machine, let me be crystal clear. These aren't your slow, old-school dividend plays anymore. This is a completely different beast, and understanding how it works is crucial before you even think about putting a single dollar into it. But here's what's got everyone talking. While traditional income investors have been playing it safe with SCHD and JEPQ, generating modest but reliable returns, MSTY holders have been experiencing something entirely different. They've been getting paid handsomely. So what exactly is MSTY, and why is it generating these insane yields that make traditional dividend ETFs look like they're standing still? Let me break everything down for you like it's so easy. Even your dog could invest. MSTY is an ETF that uses options to generate income from the MicroStrategy stock. That's a mouthful. This is just the surface. Let's dive in, one step at a time. First, the YieldMax means the fund is built to generate as much income yield as possible. It focuses on monthly payouts, even if that means giving up some growth or stability. Second, MSTR stands for MicroStrategy, a tech company known for buying a ton of Bitcoin. In fact, they've bought so much that investing in MicroStrategy is kind of like investing in Bitcoin with extra risk. Now, the option income strategy twist is where it gets interesting. MSTY doesn't just hold MicroStrategy stock. Instead, it uses options to earn extra money. Here's what it does. MSTY uses strategies like selling covered calls and cash-secured puts to generate income. It's like owning a car you don't drive, you rent it out for cash. MSTY does the same with MicroStrategy stock by using options to earn money no matter where the price goes. When you sell a covered call, you're basically saying, hey, I'll let you buy my stock at a certain price by a certain date, and you pay me money up front for that privilege. If the stock doesn't reach that price, you keep the premium and the stock. If it does, you sell the stock at the agreed price, but you still keep that upfront premium. This strategy can generate substantial income, especially when the underlying stock, in this case, MicroStrategy, is highly volatile. To understand why MSTY has been performing so well, you need to understand MicroStrategy and its wild relationship with Bitcoin. MicroStrategy isn't your typical tech stock. Under their current CEO leadership, the company has transformed into what many consider a Bitcoin proxy. They've been buying Bitcoin aggressively, using corporate cash, debt, and even equity raises to accumulate more Bitcoin. As of recent reports, MicroStrategy holds over 592,000 Bitcoin, currently worth $61 billion, making it one of the largest corporate holders of the cryptocurrency in the world. It's mind-blowing, honestly. This means that MicroStrategy's stock price moves in almost lockstep with Bitcoin's price movements, but with amplification. This means when Bitcoin goes up 10%, MicroStrategy might go up 15% or 20%. When Bitcoin crashes 15%, MicroStrategy could fall 25% or 30%. This volatility is exactly what makes it perfect for option strategies. High volatility means higher option premiums, and higher option premiums mean more income for MSTY to distribute to shareholders. It's like having a cash machine that prints money faster when the markets get more chaotic. This is where the magic happens. Bitcoin has been on an absolute tear in recent years. From its lows in 2022 to its highs in 2024 and 2025, Bitcoin has delivered far higher returns than gold and most traditional investments. And MicroStrategy, being so closely tied to Bitcoin, has been along for the ride. This Bitcoin correlation has created a perfect storm for MSTY. The high volatility generates substantial option premiums, while the overall upward trend in Bitcoin has provided a favorable backdrop for the strategy. Now let's compare MSTY against the kings of dividend investing, SCHD and JEPQ. Let's see who really rules. SCHD, the Schwab US Dividend Equity, is basically the gold standard for dividend growth investing. It focuses on high quality, dividend-paying companies with strong fundamentals and a history of growing their dividends over time. It's boring, it's reliable, and it works. The yield typically hovers around 3 to 4%, and you get steady dividend growth over time. JEPQ, the JP Morgan Equity Premium Income, uses a covered call strategy on the NASDAQ 100. It's designed to generate higher income than traditional dividend funds while still providing some upside participation. Yields typically range from 8 to 12%. Both of these are excellent funds for what they're designed to do, but they're playing a completely different game than MSTY. When you look at total returns over the past year, the differences are stark. While SCHD has delivered a solid and steady performance with its combination of dividends and modest capital appreciation, JEPQ has provided enhanced income with limited upside. MSTY has been in a league of its own. The combination of high option premiums from MicroStrategy's volatility and the underlying performance of MSTR stock has created a situation where MSTY holders have been getting massive distributions while also seeing capital appreciation. But here's the catch. This kind of performance comes with risk. SCHD and JEPQ spread their money across many companies. MSTY, on the other hand, is basically a big bet on just one company, MicroStrategy, and even more, on Bitcoin. Now, before you start liquidating your entire portfolio to go all in on MSTY, let's talk about the risks. Because if the yields sound too good to be true, well, there are definitely some catches you need to understand. Risk number 1, concentration risk. MSTY is essentially a single stock play. Everything depends on MicroStrategy's performance, which in turn depends heavily on Bitcoin's performance. If Bitcoin has a prolonged bear market, MicroStrategy's stock could crash, and MSTY would likely crash with it. Compare this to SCHD, which holds dividend stocks across multiple sectors, or JEPQ, which is based on the entire NASDAQ 100. The diversification difference is quite unique. Risk number 2, volatility risk. While volatility is what generates MSTY's high yields, it's also what can destroy your capital. MicroStrategy can swing 20 to 30% in a single day during major Bitcoin moves. Your MSTY holdings will swing with it. If you're someone who checks their portfolio daily and gets stressed by big swings, MSTY is probably not for you. This is not a set it and forget it investment. Risk number 3, option strategy risk. The covered call strategy that generates MSTY's income also caps the upside potential. If MicroStrategy has a massive run-up, MSTY holders might miss out on some of those gains because the upside has been sold through call options. Additionally, if market conditions change and option premiums decline, the fund's ability to generate high yields could be significantly impacted. Risk number 4, NAV erosion risk. This is a big one that many investors don't fully understand. High-yield ETFs like MSTY often experience what's called NAV erosion over time. The high distributions can come at the expense of the fund's net asset value. Think of it like this. If a fund is paying out more in distributions than it's earning in total returns, that money has to come from somewhere. It comes from the principal value of the fund. Risk number 5, interest rate risk. Changes in interest rates can impact how options are priced and how attractive they are compared to other investments. If interest rates rise significantly, the yield advantage of MSTY might become less compelling compared to safer alternatives. Given all these risks and potential rewards, who should actually consider MSTY for their portfolio? If you're someone who needs maximum current income and you understand and can tolerate the risks, MSTY might fit. Maybe you're retired and need high cash flow, or you're using this as part of a larger income strategy where you can afford to take risks with a portion of your portfolio. If you're bullish on Bitcoin long-term and believe MicroStrategy's strategy will continue to pay off, MSTY gives you a way to potentially benefit from that thesis while generating income along the way. Also, if you're someone who actively manages their portfolio and can make tactical moves based on market conditions, MSTY might be a tool you can use during periods when conditions are favorable for the strategy. But if you're a conservative investor who prioritizes capital preservation, MSTY is not for you. If you can't handle seeing your investment swing wildly in value, this isn't the right choice. Lastly, if you're looking for a core holding that you can own for decades without worrying about it, stick with something like SCHD or JEPQ. Here's the bigger picture of the whole MSTY hype. MST represents something bigger than just another ETF. It's part of a growing trend toward more aggressive income strategies in response to years of low interest rates and investors' hunger for yield. The success of MSTY also reflects the broader acceptance of Bitcoin and cryptocurrency in mainstream finance. 5 years ago, a corporate Bitcoin strategy like MicroStrategy would have been considered reckless by most investors. Today, it's seen as innovative and forward-thinking by many. If you're considering adding MSTY to your portfolio, here are some practical considerations. Given the risks involved, MSTY should probably represent a small portion of most portfolios. Think 5 to 10% maximum for aggressive investors, less for conservative ones. This isn't a core holding, it's a satellite position. I can't talk about investing without the tax that comes with it. The high distributions from MSTY will create significant tax implications for taxable accounts. Make sure you understand how these distributions will be taxed and consider holding MSTY in tax-advantaged accounts if possible. Before buying into MSTY, keep this in mind. It's not like SCHD, which you can mostly ignore once it's in your portfolio. MSTY requires more active monitoring. You need to stay aware of Bitcoin trends, MicroStrategy's corporate actions, and changes in market volatility that could affect the strategy. Have a plan for when you might exit the position. This could be based on yield levels, Bitcoin price targets, changes in your income needs, or shifts in market conditions. The truth is, MSTY has delivered exceptional performance for those who got in at the right time and understood what they were buying. The combination of Bitcoin's bull run and high option premiums created a perfect storm that generated those eye-popping yields and returns. I'm thinking about grabbing more MSTY shares soon, but SCHD is still the better choice for investors who want steady, reliable dividend growth with lower risk. It's boring, but in investing, boring often wins. JEPQ offers a middle ground enhanced income with managed risk through diversification. It's not as exciting as MSTY, but it's also not as risky as MSTY. So MSTY is the high-risk, high-reward option that could deliver exceptional returns or significant losses depending on market conditions. Aside from MicroStrategy's CEO, no major institution is buying Bitcoin. This only adds more risk because if he ever decides to liquidate, the impact could be disastrous. The real question isn't whether you'll regret not buying MSTY now, it's whether you can afford the potential consequences of not buying it. This is a strategy that works until it doesn't, and when it doesn't work, it can fail spectacularly. If you're considering MSTY, educate yourself thoroughly about options, strategies, and Bitcoin. Start small. This should be a tiny portion of your portfolio initially. Have realistic expectations. The recent performance might not be repeatable. Plan your exit. Know when and why you might sell. Monitor actively. This isn't a set and forget investment. The key is making an informed decision based on your individual situation, risk tolerance, and investment objectives. Don't let fear of missing out drive your investment decisions, but don't let fear prevent you from considering innovative strategies that might fit your needs. What do you think? Are you convinced that MSTY deserves a place in modern portfolios, or do you think the risks outweigh the potential rewards? Let me know in the comments below. Go watch the videos above where I explained everything you need to know before starting ETF investing. Also, watch this video where I explained in details what a $5,000 dividend portfolio pays you monthly. Happy investing. See you in the next one.